Hello everyone, Mehdi for Tokyo Alpha Mine. I'm an AI and finance professional and global investor from Japan for over a decade now. And on this channel, we have one mission: to cut through the noise and find alpha in both life and markets. And so today I wanted to talk a little bit about a piece of news that I've seen coming up more recently. And that's about Robinhood and the fact that it will offer some European investors the privilege, I would say, of buying tokens of stocks of private companies like OpenAI and SpaceX, for example. So why do I want to talk about that? Actually, I've discussed about this topic on X already, and there are actually a lot of different opinions on the topic. And I think that there are really two camps here. Some people are definitely against, and some people are definitely for this type of schemes. So the scheme that is envisioned by Robinhood is using basically crypto and blockchains, here Ethereum, to basically tokenize stocks. So what does it mean? It means like minting like tokens to represent the ownership of companies, so either public companies or private companies. And so today, basically, the main argument is about private companies and why it's actually very, very not dangerous, but a lot of debate on this topic. So the first thing, in terms of the scheme, so it's still not very clear how it's going to work in Europe and in the US, but the idea is for Robinhood to actually mint and create tokens and sell them to users, and this should actually represent ownership in those private companies like OpenAI or SpaceX. So why is it actually dangerous? So the first thing you have to consider is basically the liquidity risk. What is the liquidity risk? Is the fact that you might be buying these tokens but not be able to sell them afterwards. Here, the real risk is that because you don't really have a real ownership in OpenAI or SpaceX via these tokens, there is the risk that actually you don't own really nothing afterwards. But Robinhood has said that there is a one-to-one backing mechanism, meaning that for every token or every, let's say, dollar of one token, there is a backing of shares of OpenAI or SpaceX behind that on Robinhood's side to actually represent the real ownership in these companies. So this sounds very good in theory, but in reality, the fact that there are so many tokens actually which are going to be minted or are going to be issued is going to be very difficult for Robinhood to actually keep the peg or keep this a one-to-one relationship between the value of all the tokens and the value of their OpenAI stakes, especially because this OpenAI stakes is basically a stake in a private company. And a private company means that there is no liquid market for the selling and buying of those shares. And so most likely what's going to happen is that there is going to be some kind of discrepancy between the value of all these tokens minted or issued and the real value of the stakes in Robinhood. So this will definitely create some arbitrage, and this will definitely create some tension, I would say, between the value of the tokens and the value of the underlying stake. And how it's going to pan out, this is very hard to actually conceive, or very hard to actually tell. But definitely it's going to actually create a lot of turmoil, I would say, around this scheme. So even though I think it's a very good opportunity for retail investors to be able to be invested in those private companies, which are actually becoming bigger and bigger, because most companies, they actually start to not being listed in the public market. So this is actually a trend. And I think that a lot of retail investors, they really want to have stakes into those companies, so into SpaceX, into OpenAI, into Stripe, for example. But this tokenization may not be the right solution, to be fair, because we can envision a lot of issues. And actually, all these issues, they're not been invented by me. Because if we look at what a lot of lawyers in the US are saying, a lot of law firms, most likely is going to be restricted by the SEC. So basically, in terms of regulation, all this liquidity risk and the transparency risk, the fact that you will not have all the disclosures available about these private companies for retail investors is actually going to be quite quite a hurdle to actually go over the SEC regulation. So most likely it will take another form for Robinhood to actually provide this type of tokenized stocks in the US. But let's be frank, most likely this trend will continue because this is what most financial institutions want to do. And so most likely, a lot of these financial institutions are going to push very hard for this type of schemes to be developed in the US and actually globally. Why? Because all of these financial institutions, they have stakes in those private companies and these private funds. And they need to find exit liquidity, meaning like a way for them to actually sell their stakes because, as I've said before, there's a liquidity risk, and as of today, they have a liquidity problem because they don't find any buyers into these private funds and private companies. So they want to find kind of an exit if they need. And so we have seen the example of Harvard, so the Harvard endowment. So a few weeks ago, actually, like when Donald Trump threatened Harvard to actually cut all the funding, so they had kind of a problem because they had to rely on those private funds, or they had to rely on the fact that they should be able to sell those private funds to continue funding their operations. And what a lot of people have realized is that the value of those private funds were not actually the value that could be redeemed on the market when they were trying to actually sell. And so that's actually a huge problem, and that's a problem that is going to happen to a lot of different financial institutions. So just to come back to the issue and the fact that a lot of those financial institutions like investment banks, private equities, for example, they are going to push very hard to push all these products and all these private assets into retails. So they are starting to do that with wealthy investors or accredited investors. So that's why you've seen a lot of private equity like KKR, Apple, they are really pushing all these products to wealthy individuals. And what we can actually foresee is that they're going to continue to push downwards towards normal retail investors. I think that will be quite foreseeable, and I think it will come in the next 5 years, definitely, because we can see the trend. And so Robinhood is going to be a great vector for all these institutions to actually do that. So even though I think that the scheme that Robinhood has actually presented today is not perfect, it has a lot of, I would say, shortfall in terms of regulations. They're going to improve definitely, and they're going to be a vector of all these private funds going to retail investors. So what we can envision and where we have to be very careful is that so there will be good private assets and there are going to be very bad private assets. So OpenAI stakes, I think OpenAI is kind of a sure bet in a sense that even though it may be overvalued at the moment, well, most likely is that in the next 10 years, well, it's still going to be there, given like the momentum that they have in terms of AI. But if you take maybe smaller companies or more unproven companies, the valuation that we can see on the private markets today means that most likely the returns are not going to be very great for those companies. And so we can envision that a lot of those companies are going to be hyped up by financial institutions and are going to be bought up by retail investors, like me and you, basically. So let's be careful of what we want to buy on the private markets if we are given the opportunity, because a lot of these assets are currently very overvalued. So that's everything that I wanted to share for today about this news on Robinhood and tokenized stocks. I hope that you liked it a little bit and that you learned a little bit of what is a tokenized stock and what is the liquidity risk behind it and how it's going to evolve in the next few years. And if you want more news about Japan, China, or US stock markets, feel free to check my other videos. And if you like it, subscribe, comment, and like these videos, and see you in another one. Bye.